And there's other data points for you to look at. One of those, in addition to what I just showed you there, so looking for long-term home price appreciation rates, you can find that, by the way. And I didn't have to pay for this data. It's all available through the government, right? Federal Housing Finance Agency is a website you can go to. That's where I pulled all that information that I just showed you on those graphs. Another place you can go and look at is the US Census to find population growth information. So why is population growth important, right? Population growth means if you have people moving to a certain area, everybody needs a house, right? So if you have a large percentage of people moving to an area, that's housing demand for both housing rental rates and home prices, right? We all probably know that. You didn't have to tune into this session to probably learn that, right? But that's important. If you look at a market over the long haul, again, that is consistently at the highest levels of population growth, what I'm going to show you here is that there's a very good chance that those population growth cities are also highest home price appreciation cities. Very cool. So let's look at the data here. Again, so everything that I'm looking at here is from either the US Census or the Federal Housing Finance Agency. But we wanted to delve a little bit deeper and look at those cities. I've chosen 6 cities here. And I wanted to look at the home price appreciation from 1991 to 2018, and I wanted to look at the population increases, okay? I've chosen these 6 cities on purpose, okay? These are typical cash flow cities, okay? What I'm trying to arm you with today is the ability to make the best decision between those cities where you can get positive cash flow. Just because I shared with you that highest home price appreciations tend to come back to the norm over the long haul, that doesn't mean I want you running out to California or New York or some of those highly appreciating markets and go there, because what are you going to miss if you go to some of those markets? You're going to get home price appreciation, but the rental income is not going to support your expenses and you won't be in a positive cash flow situation. So the reason I chose these 6 cities, because these are 6 cities where, generally speaking, you have positive cash flow. And what I want you to do now is to go a step further and look at which cities are poised to appreciate more. And my theory and how I invest is you should put more of your assets in those ones that have higher appreciation. So let's look. Let's start at the bottom. Cleveland. For those of you who kind of follow us on Facebook and all of our live streams and a lot of my trainings here, I don't let a training go by where I don't make fun of Cleveland. And I've quickly realized that, you know, the clients that we have in Cleveland, I'm probably not going to get another client from Cleveland, but I am from Pittsburgh. I'm a huge Pittsburgh Steelers fan, and it just so happens that Cleveland's numbers don't look very good. I feel this 0% bad about talking about this with Cleveland. But the reality here is we're looking at the numbers. Population in Cleveland from 1990 to 2017 actually went down, right? People are leaving Cleveland. 24% decrease in population. That can't be good for rising demand. But something else to look at, Cleveland, home price appreciation. So even though population went down, that demand for housing in theory went down, home price appreciation still went up 2.4% from 1991 to 2018, over 27 years, right? That in itself shows you the strength of this asset class as a hedge against inflation. As the value of goods and services go up around real estate also goes up. So 2.4%, not bad, especially if a quarter of your people have left. If you go onward and upward here, take a look at it, you know, Memphis is another popular cash flow market there. Their population increased about 7% from 1990 to 2017, and they experienced 2.7% appreciation onward and upward. And what you see, as I'm sure you're not surprised, knowing that I am completely biased because I do invest in Jacksonville, is that Jacksonville here is at 4.3% appreciation from 1991 to 2018. But look at this population increase. Population increased 40% from 1990 to 2017, right? You can also look at Dallas. Dallas is a very similar market to Jacksonville. It is one of those markets where you can still get positive cash flow, but population has been going up and home price appreciation has been going up, right? So hopefully this speaks to you. This is another data point that you can look at to evaluate the markets you should be investing in.